Hey guys, today is September 6th, 2010, and looking at a chart of the S&P 500. It's a 5-year weekly chart. Just getting things started off here. Looking at a big picture, and as you can see, we talked about this a lot in depth in the weekend update. We had this head and shoulders pattern, and again, that did work out, and we hit the target on that. And then came down to the lows. We had a hammer candle form on the 200-day moving average. Some buying interest off of that, but then again, most recently we saw price shoot up into support, and we actually had an inverted hammer form off of that. So, early this week, I was talking about how I'm expecting price to continue down, and I'm looking for the 1,000 to 1050 area, so somewhere in here for a profit target. And then again, stops are above the high of this hammer candle. Now, if price does breach that, I will be looking to essentially get long again, at least until this support area. And if we can make it above there, then this trend line will probably be retested. But that would be a big blow to the bear. So as long as price is able to float around below here, I think that the bears are in control. But if sentiment starts to shift, then that'll be a different story. Now, something interesting here that I want to point out that we're seeing on lower time frames. We'll go to 2-year daily. And I'll take off these studies to make it easier to see. But we were talking about this lower trend line right here coming through. It sort of makes a channel. You can kind of see that. But, this was a level that the bulls had to hold, if they were going to really kind of make a push here. Otherwise it was kind of game over. So you can see that price actually gapped down quite a bit overnight. It doesn't reflect here in this contract, but if you look at the cash, the actual tradable, you can see there's a pretty big gap down overnight. That's because we had a bunch of stuff come out in the Eurozone during Labor Day weekend. So it's a long weekend for us, but markets were taking a pretty big hit. But anyways, pretty much price is holding this support for now at least. And the other thing that's kind of interesting here is looking at the euro. Now, if we take the euro back to our 5-year weekly chart that we talked about this weekend again, you can kind of see prices coming into this level, this value area between around 140. And so the plan here, I guess, the trade that makes the most sense is to get long off this level. Now, if we look at the hourly chart real quick, you can, overnight you can see we had this massive spike when the Swiss bank came out and said they're going to intervene. Things really kind of just went out of whack for quite a bit actually, and then the sell-off resumed. So we're kind of coming off into this. The support area, you can see we kind of have some sort of reversal going on, so maybe that's an opportunity to get along with a nice tight stop, because as we've seen in the past, every time price comes down to these value areas or the bottom of the range, we get a very nice pop. So right now everybody is pretty much talking about how bad things are, and how much lower this could go. And I don't think there's too many people out there who are looking at this and thinking, let's buy. So I guess you have that that crowd trade trading to the downside, but the technicals are show a value area. Now if buyers show up or not, well, in the near term we have evidence, like we just saw a 60-minute chart that's showing some buying interest. So obviously somebody down here is interested in picking this thing up. So it might be worth the risk. Actually, the very tight stop obviously below these lows right here, and then upside target would be a lot higher. The other way to play this, if you're more of a macro trader, would be to look at a weekly chart. And again, you're still buying in this value area, but essentially your stop is below the low of this candle right here. So you're working with the looser stop. We're talking maybe around the 138 at the low of this candle is 38.35, so around 138 would be your stop, and you're looking for about an entry right around this level at $1.40. So you're risking 200 pips on that. right? And again, your upside target, if that's the case, your upside target would be somewhere in this level up here. And that level again is roughly 151, 152. So that's pretty much the game plan. So if you have a near-term game plan, where we can kind of get a short-term pop. Of course, long-term we just went over. So that would give you about 200 pip downside risk, and again, your reward is going to be, let's say we go 51 on that 52. You're getting like 6-to-1 risk to reward. So that's a trade that you might want to look into. And then on the near term, sorry, I keep flipping back and forth here, but just trying to describe different ways of looking at the market and just different ways to slice it really. But here your risk is going to be the low of this bar right here is 39.69. So let's look at 39.50 on so 50 pip stop, and then again, the most relevant resistance is going to be probably this area right here, or this area first rather. So we're looking at about 141.5 for the beginning, the first target, and then you can probably work it up to 42.5. And if price really gets going, maybe 143 is a good target to look at as well. So plenty of upside potential here, a good risk to reward. In my opinion, not a lot of people are focused on the upside reversal here. Everyone's kind of focused on it's going lower, it's going lower. So looking at that's the S&Ps, that's the euro, and then of course there's good old gold. And gold is interesting today because it's actually trading lower. Now, a couple key things to look at here. This is a bearish engulfing pattern, right? Because price is now completely engulfed the previous candle. Again, it comes to the highs here. So some people might want to take a short here, put a stop of the high. Not a trade that I want to take personally. I think that's trading gold for me is a little bit too risky right now. I still have my silver long. Again, that's taking a little bit of a hit today, but I'm more comfortable holding this than I am holding gold. And the volatility in gold is significantly higher, so I'm going to sit on my hands on this one. And then again, there's a couple other ones, APKT. I'm short this guy. So we started off with a nice little morning drop and kind of pushing back up here. It's still in the money. I'm going to watch this closely. I'm still deciding if I want to drop this one and take my profit or if I want to hold on to it. So I haven't decided that just yet. As we come into the close in the 2 hours or so, I'll make up my mind and let you know what I do there. But the other one I was watching was GDX, and GDX is interesting because we actually had this very clean breakout here, and today's candle, very nice follow through. But as gold reversed, this one started to reverse as well, and actually came all the way down to, let's see what's the low here, 64.38. So I actually have a buy on this one. Have not been triggered yet. Came pretty darn close, but I am actually looking for it to come down and retest the support level. So around the 24.25 would be good for me. But if we do see some price action develop on a 60-minute chart that encourages buying, then I will be more than happy to get on the bandwagon there. I think this one is a very clean breakout, and plenty of upside there. Good risk to reward. And finally, one that I'm looking at today is good old Walmart. So I was trying to get in on 51. I wasn't able to get filled on that. I was a little bit late on the order. So I will just let it, if it wants to get away, that's fine. But what's really kind of tipping me off on this one is if you look at the monthly chart, so again, this would be a very long-term play, but we have a very nice clean hammer candle forming. And coming off this lower trend line, so if he pushes back even more, go to all history, monthly, you can see there's a nice symmetrical triangle here. And again, we have this high right here, but you can see prices pretty much, for the most part, been bouncing around for quite quite a bit of time. You can drop in this range here and say, okay, well, this is the range 37 to 60. Now, Walmart is a pretty safe bet. Times uncertainty, they have a pretty solid customer base, and they offer good value. So when times do turn rough, people still turn to Walmart to do shopping. So that's something to keep in mind when you look at these recession-proof plays, I guess. But anyways, looking at it a bit further, if we do see this come into play, and we do see a breakout, off this triangle here, even with that by itself, let's say we're going from 39 to, or let's say we're going from 40 to 60. If we add that to the breakout level of, let's say, 55, then we get a 75 target. Okay, so there's plenty of upside here. Again, the other way of looking at it is, if we do take this range it's been in for since 2000, really, and that's 37 to 59, you get a similar sized breakout. Okay, but that breakout will be taken from the breakout of the green line. So, quite a bit to look at here, and there's a lot of opportunity. But this is one that if I can get filled on that 51, I'll look to this for a longer term play. Again, stops will be right below the low of this hammer candle, and that'll give me a very nice risk to reward ratio. So if price does come up till here, I'll unload half the position, and then beyond that, I'm looking for that target. So that's pretty much what I'm looking at for now. Just trying to, play both sides of the field as much as possible. With currencies, I'm short-term bull. And if that really starts to run, then I'll hold on to that, because the higher time frames are encouraging higher prices. But the fundamental factors are against that. So a lot of times what I've learned is that all these things are pretty much in the chart, right? I mean, no matter how big your portfolio is or how big your hand is, if you're going to make a move, it's going to be reflected on the chart. So if somebody's buying, it's going to be there, right? You can't miss it. Anyways, before I ramble on too much, that's the gist of it. And good luck this week. Be careful. I'll probably have some more updates coming up. And thanks for watching.